This is MoneyPigTrading. Today is January 24, 2021, 2 days after the GameStop short squeeze and gamma squeeze massacre. I want to explain what's going on and what is next. So if you watch the market closely, you will notice there was a really big event on Friday. Is GameStop. What happened is GameStop had a short squeeze last week and sideway consolidation holding the bull flag on the EMA support. And on Friday, just another push at closing. The GME GameStop actually up 51%. It's pretty crazy. So short squeeze actually provide a really good day trading opportunity. That's why we shouted out this trade right before the short squeeze, at the beginning of the short squeeze on January 22nd, to buy the 50 calls at 70 cents. And we eventually closed that 50 calls at $5.6 per contract. That's the option. So it's about 700% in return. My model only predict that GameStop will only push up to $60. So that's why it closed a little bit early. Eventually pushed up to 71. This contract will actually ended up about $25, which will make us like 3,000%. I definitely kick myself that should at least keep one or two contract, but that's okay. It's 700%, still pretty decent. Not only that, we're hitting BBBY and also AMC and other short squeeze plays. So it's pretty nice. But what's going on? Let's go through what is GameStop first. So it's game retails that still have the brick and mortar, like sale games. And you will see walking, there's all the games being displayed in the stores. People don't really like these stocks because Microsoft, Nintendo, they all put their game platform online. So what you can do is you buy the console, connect to the Wi-Fi or internet, and then you can just download everything, all the games from online. So you don't have to go inside a GameStop store buy games anymore. So GameStop was such a popular stock, maybe early 20s, early 2000, but now it's like nobody likes it. So at some point, GameStop dropped to like $2-3 per share. Don't quote me if I'm wrong. Yeah, it's kind of slightly bounced back, but yeah, people just don't think this company will make it. It'll probably bankrupt at some point, etc., etc. So this is their website, by the way. What happened is during COVID, a lot of people started to buy video games from GameStop, including myself. I know a lot of people is like, you still buy games on GameStop? Yes, I do, because I have been writing so much codes, trading. It's very stressful. I've been sitting, even have a standing desk for so long, right? I don't want to sit too long when I play video games. I want to stand up, exercise as well, keep in shape. So Microsoft Xbox Kinect actually can allow you to do all the motion, and they will read your motion and play the game accordingly. So you can play those sports. And during COVID, when you shelter in place, especially in California for so long, don't you want to wield your lightsaber to kill some drones in Star Wars or play Hami Hami Pop in Dragon Ball Z, right? So I think that's fun, and you cannot buy those games anymore online very easily. So that's why I buy all of them on GameStop. And I actually went to the store, talked to the staffs, and they said because of COVID, everybody is shelter in place. Their sales actually increased quite a bit, even though it's not comparable to like before, like early 2000 or 2008, something like that. So, and that's why we're seeing some bounce in this COVID period for the GameStop stock price. So back to the topic, short squeeze, what's going on? So when you long a stock, you're holding that stock. And if you want to short a stock, what you happen is you have to contact the dealer, you set the order, and what the dealer does is they actually look up their dealership who has the stocks, and then they will ask the loan stock holders to loan out the stock, and then they will borrow the stock to the short seller. And in return, short seller have to pay a certain interest and maintain a margin requirement. And some of the interest will go to the dealer, and some portion of the interest will go to the loan stock holders. Depends on the dealers. You have to look at the user manual and everything. And also, some of the brokership doesn't check this in default, like you can borrow out your stock. So if you are doing long-term investment for some stocks, that's actually a good FYI. You should check your brokers, see if you have to manually enable your stock to be borrowed out. If not, you have to check it. Otherwise, your stock will never be borrowed out. And the benefit of being borrowed out is, you can receive some interest rate. And the interest rate is floating. You can check with your broker how much that interest rate is. The more popular, the higher the demand the stock to be shorted, the higher that interest rate will be, basically. So what is short squeeze? So in this case, GameStop, the short percentage of the share outstanding is more than 100%. When you look at this number, it's like, how could that be possible, right? That you can simply read it as basically the demand of shorting the stock is way over the supply. That short seller cannot find any single share to sell anymore, right? They just borrow 100% of the stock, which is crazy. And that's why I never buy put options or short anything. That's about 40-50% of the short interest for swing trading. For day trading, it's probably fine. But for swing trading, it's actually, unless there's a special event, it's so risky that you're going to hit with this short squeeze and just get your position murdered. So I think that's definitely a very important metrics. And when I see this number, I really don't understand why people just keep shorting GameStop. So yeah, so because of that, when the stock price keep going up, back to short squeeze, what happened is short sales will have to stop loss at some point, right? Because they're betting the stock price is going to go lower. The lower it goes, the more profit they have. But when the stock price keep going up, they are actually losing money. So a lot of them have to set a stop loss. Or what happened is they will trigger a margin call. In both cases, they will have to close their position, return more stocks, and that will just cause them the short squeeze. The other thing is gamma squeeze is in options, when you buy more and more call options, so dealers will have to sell more calls accordingly. And when the more sell calls they have to buy loan the stocks to hedge their so-called sell call positions. So by doing so, it just create a very bullish cycle, right? The more people think it is bullish, they buy more call options, and then dealers sell more calls, and then they more they loan more the underlying stocks to hedge their sell calls and just keep pushing the price up. And in that case, if we go back to the short squeeze cycle and the price keep going up, the short sellers have to maintain their margin calls or being triggered the margin calls and close the position or stop loss, keep returning more stocks, and that just create a vicious cycle basically, or bullish cycle, whatever you called, and just keep melting the price up. And not only we're seeing this in the GameStop situation, we're actually seeing July and August 2020 when a lot of funds just keep buying like $100 million worth of call options on Apple, Tesla, right, every week. Just keep melting up all the whole tech sector, and that's the gamma squeeze. And if you look at the GameStop, this is the open interest for the call options, which means people are bullish about this underlying stock. That's why they buy call option. Put options, you are bearish on the stock. You think the price of this stock will drop. Look at this GME. Most people are just buying call options. This is next week, by the way. I don't have the data for last week from my broker, so I'm only showing this next week, January 29th data, right? So even next week, most people are still thinking bullish. They're buying most of the call options and not a lot of put options. So yeah, that's why there's a gamma squeeze. What is next? So if any GME executives are listening, they really should consider stock offering. When they offer stocks, the stock will tank temporarily 1 to 3 days. By doing so, they are probably going to offer some stock at a lower price, and they will get some more cash. In this case, like one of our brilliant Discord member mentioned, like if they raise the stock offering right now, they can probably just wipe out their debts. Right now they have 1.2 billion of debts, and their market cap right now, thanks to all the squeeze, is at $4.5 billion now. Imagine they offer a stock offering, that price will actually dip back for 1 to 3 days. But people will start to think, okay, this is bullish again because, now they have way more cash. They clean the debt. Maybe they will buy an EV electric vehicle company, become a brand new tech company from GameStop. Of course, I'm kind of joking, but maybe that will happen, right? So in the mid-long term, that will keep pushing up the GameStop price if that happen. But short term, because the stock offering is just usually lower than the current market price, and that's why it's causing that 1 to 3 day of dip. So what is next? Get your popcorn ready, seriously. And follow MoneyPigTrading. That's what we're for, right? We not only watch charts, we watch the short interest call option volumes and build the in-house state-of-art AI model to facilitate trading. And I think that's why we have such a good trading record. I always think if people just look at their charts, a stock chart, that doesn't really get a whole picture of what's going on with that stock. You have to look at everything. So I think that's one of our strengths. And also watch the stock offering. If the news come out, I guess this week, if I'm the GameStop management, I will do that ASAP. So if that happens in 1 to 3 days, it will be bearish. And of course, if you want to keep doing this GameStop short squeeze and play, go ahead. But I mean, don't bet all your housing mortgage money or all your money. It's very risky, as you see. There's just so many moving pieces, and it's really hard to accurately predict all the moving pieces together, right? So trade carefully. And again, we're not financial advisors, so please just take it as an education purposes. Please do your own due diligence and invest at your own risk. And yeah, please give us a follow and like the video on MoneyPigTrading.com, and our Twitter, YouTube, Instagram are all MoneyPig Trading. And thanks for watching, and happy trading next week.